Welcome back. You're still tuned into ET Now and you're watching Market Fatafat with me, Ashish Kyal. This is a show where we discuss all the stocks that are buzzing in trade today, either on the back of fundamentals or on the back of technicals. But first up, let's take a look at what the market is doing at this point in time. And yes, we have fallen from the day's highs. Nifty is now well below that 24,150 mark. In fact, 2415 thereabouts is where the Nifty is trading at this point in time, and Nifty Bank 2 is sitting with a cut of nearly 0.6% in trade today, below that 56,000 mark. So clearly we are seeing some bit of pressure build up in the last one odd minute. But let's take a look at all the stocks that are in focus today, and on the technicals we are now joined by Mr. Ashish Kyal, founder and CEO at Wave Strategy Advisors. Ashish, afternoon. We'll come to you in just a bit on the technicals. On the research, we have Rabinder joining us as always. But first up, let's put the spotlight on Tejas Networks. The stock is in focus. It is under pressure on the back of weak set of results that the company has reported. The stock is sitting with cuts of 3.5% as we speak. Revenue has seen a massive decline on a year-on-year basis, and losses too have widened for the company. Revenue fell by about 83% YOY to come in at about 330 crores versus revenue of 1900 crores that the company had reported same time last year. As I mentioned, losses too had widened. The company had same time last year reported a loss of just about 72 crores, which has come in at over 200 crores in the fourth quarter of FY26. Other than that, there has also been a management resignation where one KMP has resigned. Mr. Sumit Dhingra has resigned as the Chief Financial Officer with effect from the 15th of May. So one, poor set of results. And second, on the back of this resignation, the stock is sitting with a cut of over 3.5% in trade today. But Ashish, you've picked up REC for us. Tell us, what do charts indicate for this counter?
Hi, afternoon to you and all the viewers. If you look at the overall trend for the market, we can clearly see that there is buying emerging from the lower levels, and the selective stocks have done exceptionally well. REC showed a very sharp rise, some profit booking from higher levels, but that's an opportunity to buy again. We can expect the stock to move towards the level of around 385 on the upside. One can maintain a stop loss near to the day's low, which is around 354 levels.
Okay, so that's as far as REC is concerned. We got a technical check on that counter, but IndiCube, that's the counter that Rabinder has picked for us, and the stock is soaring in trade today. Rabinder, tell us more.
Well, as IndiCube space is in focus, the company has signed a 52 crore workspace deal with the Japanese e-commerce giant for approximately 35,000 square feet at Outer Ring Road, Bangalore, over a tenure of 5 years. And if we talk about the strategic importance of this project, of this deal, is that the deal will support the clients India's expansion with a fully managed enterprise-grade office workspace, and this highlights growing demand for flexible and a managed office solution among the global enterprises. So, back of this news flow, IndiCube space is in focus, and the stock is up more than 20% with the upper circuit on an intraday basis.
Okay, so that's IndiCube for you. The stock is up more than 10% on the back of that. But let's also put the spotlight on a railway counter, and this stock is in focus for the second consecutive day. RailTel, that's the stock that we are talking about, and the company has secured a letter of intent from Konkan division for an integrated IT solution monitoring of minor minerals, and the contract value stands at about 100 odd crores. So on the back of fresh order wins that have come along the company's way, the stock is up nearly 2% in an otherwise tepid market that we are in right now. But let's also put the spotlight on the metals counters then. And Ashish, you've picked up Hindalco for us this afternoon, the biggest Nifty 50 gainer. Tell us, where do you see the charts headed for Hindalco?
See, if you look at the overall aluminum prices, that has managed to stay strong, and that has helped stocks like Hindalco and other metal stocks also to rally on the upside. Hindalco in this kind of a market has touched 52 weeks high. That shows relative strong strength, and we can expect the stock to move towards the upper level of the range, which is around 1090 basis of a Fibonacci projection. And on the downside, one can maintain a stop loss of 1002 level.
So that's the view coming in on Hindalco. The stock is up more than 3% in trade today. But Viatech Vabag, Rabinder, I believe JM Financial has come out with a report on this. Tell us, what do they have to say?
Well, as Viatech Vabag is in focus on the back of positive brokerage note, where JM Financial has come out with the note on Viatech Vabag, and they have initiated coverage with buy rating and target price rupees 17.75 GM Financial say that the VATech Vabag is a leading pure play water technology company with a strong global presence across municipal and industrial wastewater treatment, desalinations, water treatment, and water reuse. And they also say that the company has a robust and well diversified order books backlog, provides a multi-year revenue visibility for the company, and order backlog is at a historic high, which remained well diversified. They also say that the company's strong addressable near-term domestic and global pipelines look very strong, and Vriddhi, which is a project of the VATech Vabag, has helped to improve profitability and return ratio, and they GM Financial estimate a PAT to grow at a 17% CAGR between FY25 to 28. So back of this positive brokerage note, VATech Vabag is in focus and the stock is up more than 5%.
Okay, so VATech Vabag in focus on the back of that, but let's also put the spotlight on IMFA. That is Indian Metal Ferroalloys Company. That stock is up over 6% the last time I checked, and this is on the back of an expansion plan that the company has informed the exchanges about. The stock is holding on to gains of more than 8%, in fact, as we speak. The company has reported that its 1 lakh tons per annum greenfield ferrochrome project is now nearing completion, while its ethanol project has been delayed to July this year. The project also features two 33 MVA furnaces that is progressing towards its commissioning milestones. The first furnace, which is pre-commissioning activities, are scheduled to commence in July this year itself. As far as the second furnace is concerned, scheduled for pre-commissioning in September this year. And the company also confirmed that its previously intimated strategic acquisition in Kalinganagar is now fully complete, with all 4 acquired furnaces currently operational. So that's an important operational update that the company has informed the exchanges about. The stock is holding on to gains of 8% on the back of that. But Cholamandalam Investment, Ashish, tell us, where do you see the stock headed in the near term?
See, we can clearly make out that the financial services company has shown very smart recoveries over the past few days as soon as the overall broader market started stabilizing. And Cholafin has also shown a very sharp rise. Some profit booking is seen in today's session, but I think that is a healthy sign as the RSI getting relieved. We can expect the stock now to move back towards the level of around 1620 over near term. On the downside, one can maintain a stop loss for the stock at around 1530 levels.
Okay, so that's the view coming in on Cholamandalam Finance, but let's also talk about HDB Financial Services and Rapinder. On the back of very strong set of results that the company reported, the stock is soaring in trade today.
Well, as HDB Financial is in focus on the back of the strong set of Q4 FY26 earnings and FY26 earnings, where companies reported an NII at rupees 2,399 crore with an uptick of 22% year-on-year basis, and PAT also saw an uptick of more than 41% year-on-year basis, and company's asset quality has also improved, and management expect that NIMs to hold above 8% range, which is bolstered by a strategic shift towards high yield segments. And management also indicated that there has been no material impact from geopolitical tensions so far, including with within the MSME segment, with the performance in March 26 remaining stable. However, management also said that the situation remains fluid, and the company will continue to closely monitor and any potential or second or third order impact over the coming weeks or months. So back of this strong set of number in Q4 FY26, HDB Financial is in focus, and the stock is up approximately 8%.
Okay, so the stock is up 8% on the back of very strong set of results that the company reported. But on that note, we need to slip into a very short break. We'll discuss many more buzzers on the other side of the break. Don't go anywhere. Welcome back. You're still tuned into Market Fatafat, a show where we discuss all the stocks that are buzzing in trade today. And let's put the spotlight on Wipro now, because all eyes will be on this IT counter, which is all set to report its numbers post-market hours today, where in constant currency terms, we are expecting growth of about 1.2%. Remember, management guidance was in the range of 0 to 2%, and we are expecting growth in the fourth quarter to come in at 1.2% in constant currency terms. IT services revenue, meanwhile, is expected to inch higher by 3.5% on a sequential basis, and in dollar terms, we are expecting a decline of 0.5% in the fourth quarter. EBIT, meanwhile, is expected to remain flat, with margins expected to decline by about 60 basis points on a sequential basis. any kind of management commentary around deal wins, around AI revenue, around ramp up going forward in FY27 will be very crucial this time around. So yes, all eyes will be on IT, but remember it will also be considering buyback. The potential buyback size stands at about $2 billion US. Remember, after the news of buyback announcement, the fact that they will be considering buyback in board meeting today, the stock has already run up quite a bit. But today we are expecting that formal announcement. The quantum is still unknown. So any kind of commentary around buyback will also be very crucial. Keep an eye out on Wipro ahead of its numbers today. But HDFC AMC, that stock is also in focus today. Ashish, tell us, what do charts indicate for this counter?
See, HDFC, AMC, and I think the overall financial services and related sector, capital market related sector should do well in this kind of a market, because the buying will emerge from the lower levels as we find any kind of a dip, and HDFC, AMC has shown a very strong relative performance. So any dip from here around the levels of 2580 will provide an opportunity for buying HDFC, AMC, aiming for the target of around 2750 levels. And on the downside, the important crucial support will be at 2500.
Okay, so that's the view coming in on HDFC AMC. But Rabinder, ICICI Lombard, the stock in focus on the back of some brokerage reports after its results. Tell us, what do they have to say?
Well, yes, ICICI Lombard is in focus after reporting a very strong set of number in Q4 FY26 and for FY26, where company combined ratio of ICICI Lombard has improved sequentially and on a yearly basis, and company reported combined ratio at 101.2% as compared to 102.5% year-on-year basis and 104.5% on a sequential basis, and the improvement in the loss ratio was driven by lower loss ratio in motor TP, health and crop segment, and ICICI Lombard Q4 growth was improved by 18.2% to year-on-year basis, which is driven by the continued growth momentum in the retail segment, which grew by 65% year-on-year basis in Q4 FY26, and management expect that the high single-digit industry growth for the motor insurance business in FY27, which is aiding ICICI Lombard growth trajectory, and fire insurance growth is likely to be muted due to price discounting. So after that, brokerages has also come out with a note, and some have upgraded their target price, and JP Morgan has upgraded the rating. So back of this new positive earnings and positive brokerage note, ICICI Lombard is in focus, and the stock is up approximately 1.5%.
Okay, so that's ICICI Lombard for you. The stock is sitting with gains of more than 1% on the back of its results. But Bharat Electronics, Ashish, you've picked up this counter for us. Tell us, what do you make of the chart?
See, if you look at Bharat Electronics chart, even after forming a low on around April 1st, the stock has shown very sharp rise from 400 levels, now trading around 452 odd levels. The overall tone is positive. I think the stock can head towards the prior swing high, which is around 471, and on the downside, one can maintain a stop loss for the stock at 442.
That's Bharat Electronics Limited for you. But IndiCube, Rabinder, tell us, why is the stock in focus today?
Well, as the IndiCube space is in focus after the company has signed a deal company has signed a 52 crore workspace deal with a leading Japanese e-commerce giant for approximately 35,000 square feet at Outer Ring Road in Bangalore with over a tenure of 5 years. And if we talk about the strategic importance, significance of this deal, then the deal supports the client India's expansion with a fully managed and enterprise-grade workspace, and which highlights growing demand for a flexible and managed office solution among global enterprises. So back of this, IndiCube space is in focus, and the stock is up 20% with the upper circuit on an intraday basis.
Well, yes, so that's IndiCube Spaces for you, the stock in focus. But let's put the spotlight on Max Healthcare. We now have the management of the company joining us, Mr. Abhay Soy, Chairperson and Managing Director at Max Healthcare. Mr. Soy, afternoon. Thank you so much for taking your time out and joining us here on ET Now. And you've announced an acquisition. If you can take us through what this acquisition is all about, why is it important for you, and strategically, why does it make sense for you to go ahead and do this acquisition?
We have recently acquired Kalinga Hospital we signed the agreement to acquire Kalinga Hospital in Bhubaneswar. We are looking at renovating the existing facility, which lies over 10 acres of land, which is prime land right in the heart of the city. These are 250 beds, which require a little bit of upgrade, which we will be doing so. It'll probably take us a couple of years to complete that upgrade. And we're also looking at expanding the present facility by another 500 beds. So this should take us up to about 750 beds right in the center of Bhubaneswar, in the heart of the city. This is very much in line with what we've done in Lucknow. At the earlier hospital that we bought, it was 250 beds. Within 2 years, we took the capacity up, we renovated the facility, and we've seen great results over there. So this is, pretty much in line with what we've done in other locations as well.
Right, but if you can share more details, Mr. Soy, what is the expected timeline on ramping up your average revenue per operating bed from this facility, and do you see them converting to company-wide level going forward?
So the ARPOB of tier 2 cities typically is lower. It will take us 2 years to complete the renovation. It doesn't mean that there will be no renovation done prior to that. So you obviously do it in phases. So you will see it getting completed in 2 years. But it's an operating hospital right now. It's an existing hospital which will be upgraded while we are operating the hospital. So you'll see the turn up in numbers as you go along. Typically, it's the ARPOB of the Bhubaneswar market is lower than what our enterprise-wide ARPOB is, or the EBITDA per bed is. But having said that, our objective is not to maximize ARPOB over there. Our objective is to get our target return on capital employed, which is typically 20 to 25% within 4 to 5 years. So essentially, given the amount of capital that we'll be investing, we are certain we will be doing northwards of 20-25% pre-tax ROCE within 4 to 5 years, which is in line and in keeping with what our stated goal of capital deployment is.
And Mr. Soy, what is the mix of patients that you're targeting at this particular facility? Is it tier 2, tier 3 population from Odisha, or do you also see opportunities from medical tourism from neighboring states?
I certainly see medical tourism potential from neighboring states. Odisha has a rich culture of medical education. Bhubaneswar has a rich culture of medical education. It also has some very, very prominent government colleges over there. It also has a very rich culture as far as patient care and hospitality is concerned. So I think all of that plays along. It's a well-connected city. It's a very well laid out city, in fact. And given the size and scale of this opportunity, we certainly believe it will not only be catering to the domestic population of Odisha, but perhaps neighboring states and medical tourism as well. Having said that, I think it will take a couple of years, like I said, to bring this facility up to the standards that can be provided that kind of infrastructure and that kind of services to global medical tourism.
Mr. Soy, let's also talk about the financial health of your company. And third quarter numbers were impacted by some issues that were faced with standalone health insurers and cashless facilities. Has the fourth quarter performance seen any kind of impact of this, or has it normalized now? What is the status?
No, so I mean, that was resolved in the third quarter itself, and that's not necessarily what impacted our numbers. Perhaps the impact on our numbers was significantly higher due to seasonality. And this year we did not have much of a season going into the third quarter because, in most part of North, what we saw is that straight monsoons went into winter rather than having the typical, vector-borne season come in between, which is the humid season. And I think coupled with the fact that there was perhaps 3 or 4 month delay as far as our rollout of capacity, what we estimated to do in the third quarter happened in the fourth quarter. That kind of had some impact on the numbers. But having said that, the disagreement with some of the standalone health insurance companies also happens to be behind us. It got sorted in the third quarter itself.
Right, and Mr. Soy, you also have quite an extensive mergers and acquisition pipeline in place. What are your expectations on the ramp-up timelines here, and what are the key geographies that you are targeting? Any kind of geography where you see strong growth?
Well, we're coming up. We've just come up, with capacity. We've recently rolled out Nanavati, Mumbai, Mohali, Punjab, as well as now Saket, Smart at Saket, which is 400-bed state-of-the-art facility. Coupled with the fact that 6 months down the line, we should be coming up with a Gurgaon facility. So lots to look forward to. In addition to that, we have acquired the Bhubaneswar facility, which will show up in the numbers as well. So very exciting year for us already, and more to come. Hopefully in the form of more acquisitions in the current year as well. We started the year on a firm footing, and hopefully we'll be seeing a busier year this year on M&A as well.
And Mr. Soy, last question, what will your growth strategy be as we head into FY27? More acquisitions or focusing on more ramping up of the existing facilities? What will your strategy be?
So I think the 20-odd cities, which is where at least two of our peers have proven viability, and that means they have reasonable performance. So we kind of back our chances in those cities. We believe these are established markets, and we are looking at pretty much each one of these 20 cities. So wherever we get an opportunity, either to acquire, and if not to acquire, then to do a greenfield over there through partnerships or otherwise, we'd be more than happy to participate. So we are searching, we have a very robust pipeline, both on the organic as well as the inorganic side. So we intend to keep pursuing that.
Mr. Soy, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the acquisition means for you and what the growth roadmap could look like for the company in FY27. But shifting focus to a couple of other stories then, and the government has introduced the Women's Reservation Bill in the Lok Sabha as a part of a special parliamentary session, marking a significant legislative step. The Constitutional Amendment Bill, along with the Delimitation Bill and Union Territories Law Amendment Bill, aims to pave the way for 33% reservation for women in Parliament and state assemblies. Prakash is now joining us with more details on this. Prakash?
Well, the special session of Parliament begins today to undertake three important bills with an objective to make certain amendments to the Women's Reservation Act for its early implementation. In fact, the Law Minister has introduced two key bills. The first one is the Constitution Amendment Bill, and the second one was, of course, the Delimitation Amendment Bill 2006. While Home Minister Amit Shah has proposed to introduce the Union Territories Laws Amendment Bill 2020. So, very significant development. You are aware about the fact that the Women's Reservation Bill was, in fact, has been cleared by the Parliament in 2023, but the Act was linked with the next census and delimitation exercise. But going by timings and the current exercise, contours are unlikely to be implemented before 2034 Lok Sabha elections. And therefore, the government has called a special session to make certain amendments to the bill for its early implementation, especially before 2029 Lok Sabha elections. However, some opposition parties have raised concern. In fact, some members have raised concern about the timings of the bill, especially when there is assembly elections underway in some states. Also, they have raised concern about the validity of the Constitution Amendment Bill, and they sought for a diversion, which was accepted by the Lok Sabha Speaker, but their demands were defeated with the 251 votes cast in favor of the bill. Along with that, Congress MP K.C. Venugopal had raised concern about the clubbing of the bills along with the Constitution Amendment Bill. In fact, he made concern about the consequences going forward, which was intervened by Home Minister, and he categorically mentioned that there'll be different treatment at the time of votings. In fact, discussion can be taken up all together on three bills, but there'll be different treatment on the time of votings. The Lok Sabha Speaker has allotted roughly 15 to 18 hours for wider deliberation and discussion on the bills, and voting will be conducted at 4 p.m. Tomorrow. We are also hearing that the Prime Minister will be speaking in Lok Sabha around 3 p.m. today.
Prakash, thanks so much for joining us with all those details. But that's all the time we have on this edition of the show. Thanks so much for tuning in. Closing trades will come up next.